Hello, good afternoon, and welcome to the first of a series of Ask Me Anythings from the ByteTree team. I'm James Bennett, the CEO of CryptoComposite, and we have today Charlie Morris, who I expect you know very well as the co-founder of CryptoComposite and the Chief Investment Officer of ByteTree Asset Management. So the idea of these sessions is to really open the floor up. The AMA is Ask Me Anything, in case I didn't already say that, which means you put your questions in and we will do our best to answer them. Please note that this is not financial advice. We are not financial advisors. We will do our best to give you sensible answers to sensible questions, but you must not take anything we're saying as financial advice. Okay, so the questions will go into the chat box, which is to the sort of right hand side of the stream, possibly below depending on your configuration. And if you type in a question, we will get started and start answering them. And while we wait for questions, Charlie, I wondered if you enjoyed this quote that went in the weekly newsletter from Øystein Stray Spetalen, who's a Norwegian billionaire. He said previously that he was pretty anti-Bitcoin. He thought it used far too much energy or consumed too much energy, the same as the whole of Norway, and wasn't interested in investing. Now his mate, another name I probably can't pronounce, when he took a large position on Bitcoin, do you remember the company? Acker. When he took a large position, his mate said, well, when the facts change, I change. And when I also read that Kjell Inge Rokke had gone into Bitcoin, it was quite obvious. I cannot bear to see that he makes more money than I do.
Very good.
So if you think that FOMO is contained, fear of missing out is contained to retail, it's not true. It happens across the entire
You've got,
spectrum.
you've got to make more money than your siblings and more money than your neighbors. And if you do that, then you're happy. It doesn't really matter what's happening somewhere else.
Undoubtedly, you move to a wealthier neighborhood, and all of a sudden you're
You're
back.
depressed. Yeah.
Very good.
Well, we could talk, whilst you're waiting for some questions to come in, James, we could talk quickly about the piece yesterday about the gold Bitcoin debate coming up.
Absolutely, yeah. So what's happening? Michael Saylor's put a challenge about gold being worse than Bitcoin. Is that correct?
Actually, it was the other way around. It was Giestra who challenged Saylor to debate because he thinks that Saylor has not been debated ever, and thinks he's only been on friendly media platforms, which is probably true. And I know he's been on CNBC and stuff, but those 5-minute interviews, you can't really achieve much. And so I think that's a fair critique. And as always with these things, it's incestuous because Giestra's mate is Elon Musk's brother, and Elon Musk obviously is now Saylor's mate. And so, there's a bit of tugging going on there, and but they're going to have the debate. And Giestra is basically a highly credible guy in precious metals. He's been in the gold market, I think, since 1978 as a broker for most of his life, and then he did some spectacular deals, not just in precious metals, but also in energy. And he's gone on to become a bit of a media mogul and a philanthropist, and he's got some sort of family conglomerate, which I don't quite know what it does, but lots of things basically. And quite interesting for a gold bug to become an environmentalist like he has, but I guess it happens. And he's just making the defense of gold.
Has he stated a position on Bitcoin?
In the interview I watched the other day, he's not anti, he's not a hater. He could do it a bit more, being a bit more convinced. He thinks it's sort of young and speculative and so on. I mean, it's the sort of usual criticism. I think he's really here to defend gold, saying don't be ridiculous. Bitcoin has not overtaken gold, and I would share that view.
Yes, that's a very good point. It's interesting, gold's been around for so long, but doesn't really have much in the same way Bitcoin doesn't, have a CEO that represents it, and so it's up to, people with a strong view and perhaps a large sort of investment in it to be the ones to stand up and defend it.
Yeah, absolutely. But I think it's, it's quite normal that during the good times, certain things go down. Like, for example, if you own long dated bonds, treasury bonds, they've lost a lot of money in the last year. They've fallen by a third of their value or something. But no one's out there saying Bitcoin's superseding bonds.
Yeah.
You know what I mean?
Yeah.
So the fact that gold's gone down in a recovery, which is kind of normal, is, is what you'd expect.
Charlie, I'm just going to pause you there because we've had a question come in, and we can pick that up in a second. So the question is from Wolf Cube. Says, will the ByteTree market health strategy be available again on TokenSets? So Wolf Cube, I think you're relating to the fact that TokenSets have made a couple of changes recently. So I'll just talk through what their plan is there. Unfortunately, they didn't communicate that to us very well. And so, this is why you haven't heard of it earlier. But the V1 sets, of which the Byte is, are basically very gas intensive. They cost a huge amount to move in and out of and to rebalance. And so the TokenSets team had been working hard on a new version, which is called V2. And V2 went live a few months ago. And they decided that they wanted to sort of decommission the V1 sets because, again, it was costing a huge amount for users and also their time in maintaining them. Now, what they had said to us before is, hey, we really like what you guys are doing. You've kind of spearheaded the wrapped Bitcoin set on the platform, so you can stay. But, everyone else, or pretty much everyone else, is going to be decommissioned. And I think when they then applied that rollout, they sort of forgot to protect us, if you like, in that. And so, that's why we saw temporarily that sets buying and selling, buying in specifically was disabled. You could still sell the set. And then secondly, they've just done another update a couple of days ago to V1 saying that the set will no longer be rebalanced, which isn't true. So for the moment, it continues to follow the network demand strategy. So I hope that clears things up. We are in discussion with TokenSets, and unless you hear a communication from us directly, we will very much be continuing to do what we have done in the past. So I hope that clears up the question. Okay, well, while we wait for more questions to come in, perhaps we could talk briefly about the network, Bitcoin network, and some of the sort of changes that we've seen in metrics over the last sort of 6 to 12 months. Charlie, I mean, what are your sort of, which metrics do you think are really interesting at the moment, either because they tell a bullish or bearish case, or perhaps just because they're evolving with the market?
I mean, all the metrics are always interesting, but sometimes they're quiet. Sometimes they're, punching in the face, saying this is worth listening to now. And just the good old spend, the transaction value, I think is always my first go-to, and that's basically at the same level as it was at the beginning of the year. And yet, Bitcoin's twice the price. So that's kind of the one that's slightly perplexing. That we've actually had this more strength than we can justify from on-chain fundamentals. The rest of them are fine. I mean, the MRI is in line. We're tracking fees behind the scenes, soon to publish that. Sorry, not tracking fees, tracking flows behind the scenes, and they're sort of balancing and explaining why prices are high. I think the IDR, the institutional dominance ratio that we now publish, that's quite interesting. And that's basically telling you when it's up in the high 90s, is telling you that the institutions have taken over the network. You would have had very, very different readings 5 or 10 years ago, when the biggest transactions weren't anything like so dominant, and there were many, many small transactions. So basically, we haven't had transaction growth. In fact, we've had transaction decline. We've got low velocity at the moment, and it's just telling you that the network has been overtaken by institutional investors. And mom and pop trades, real economic use dead. The idea that this is a currency, it's not, it's an asset, and that's really coming through in 2021 data.
Yes, absolutely. I think the on-chain transaction volume is a great one in dollar terms, because I remember we used to say $14 billion a week was a good week, and we said that for 18 months. That was our indicator when Bitcoin was around that sort of 10K, 8K mark. And now we've moved into a different regime. We're seeing $8 billion a day, which is about 50-60 billion dollars a week in activity. So it was really a regime change. Okay, we've had another question come in, a couple in fact. So first one, Charlie, I'll put to you. So how does the amount of inflows drive the Bitcoin price? Is it linear, or does the amount fall over time? So maybe you could give a little bit of sort of a background on the relationship between flows and price, and then hone in on what we see with Bitcoin.
Well, that's the first apology is that we can't just shove a chart up there right now. We need to work on that to make sure that we can in future weeks, or at least follow up in the letter next Wednesday. Maybe we could follow up in the letter next Wednesday. That's probably the way to do that, with a good graphic. But basically, in 10 days time, I think it's about 10 days time, will be a million coins to mine before the end of the 4th epoch. And someone's got to buy them. Simple as that. People aren't going to mine Bitcoins and hold on to them. I know everyone in the space likes to think they will, but it just seems extraordinarily unlikely given the costs and investment that they have put in to becoming a Bitcoin miner. So they're going to be sold. And so, if you can see the funds expanding, then that's pretty exciting. Now, March was basically a flat month, and we didn't see very much inflow at all from the funds compared to previous months. We saw massive flows in October, November, December, some in January and a bit in February, but really nothing in March at all to speak of. And so those miners carry on selling, and I think we haven't seen a new high as a result. You'd need to see a big demand. You'd need to see all of those Bitcoins scooped up, which is about 30,000 a month or so. And it could happen. It could happen. I mean, certainly we hear rumors that some of the private banks are getting involved, and so the big American private banks are slowly allowing their clients bit by bit to start buying this stuff. And if they do, then I think it's just going to stabilize the Bitcoin price, because there's a lot of people with a lot of money who don't own Bitcoin, and if they do come in, that will provide stability. But I guess it's not my dream. It's not how I visioned a rising Bitcoin price. I want to see people using it. I want to see it developing things and going gangbusters and punching everyone in the face with a big wow, rather than just rich people buying it, which is sort of okay. But it goes up.
So you would say flows are important for the price, especially as we get to higher levels of price, because someone's got to buy the new coins that are being sold into the market.
Yeah, I mean, flows have obviously always been there, but the difference is that 5 or 6 years ago, the flows only accounted institutional flows. So what I mean by this is the funds. So the Grayscale fund and the CoinShares funds, which are in Sweden, and then more recently we've had many more funds. So there are now about 14 of them that we track, and these are pretty interesting. But going back 6 years, they accounted for 10% of mined Bitcoins. So 10% of what was being mined was being sold to the funds. And the prices were much lower, and so retail investors could easily afford to take up the slack. But now you're dealing with $55,000, $60,000 Bitcoin. Retail investors can't pick up that slack. You can't expect $55 billion to come from retail over the next 3 years. You've got to get the big money in to maintain these prices. So the institutional flows are very, very important now, and that's why they're a metric that we're focusing on, and we're publishing data soon.
Yeah, and to put that in perspective, I believe we're looking at about 4.5% of all the Bitcoin that have ever been mined are now sitting in institutional sort of facing instruments. So it is significant, Paul. Okay, moving on to the next question. We've had a question about whether bold factors into ByteTree marketing health strategy at all. And I would start by saying, I think we could definitely have you as an advisor to us. I think that's a fantastic idea, having this blend of Bitcoin and gold, where the Bitcoin side is perhaps managed by the network demand model. So yeah, I really like that idea. At the moment, that's not something that we're working on. We're keeping the two separate, but I can say with respect to Bold and TokenSets that we are working on something very exciting there, which we will share more information on as we are able to. The final thing I think on this for me is Bold is inverse volatility weighted. And so somehow, it wouldn't necessarily be Bold. If we merged it with the network demand set, it would be a different version of Bitcoin and gold. But for us, Bold at the moment is that sort of inverse volatility weighted weighting. And you can find out more about that on the ByteTree Asset Management website. Not to plug it, but it is a great resource. So do head on over there. Charlie, anything to add on?
Yeah, well, I've definitely got lots and lots of gold models, not just the valuation model, but the regime models. So it'd be easy to do a network demand for Bold. I hadn't actually thought of that. I guess, so well done. Maybe a free token for that good man or gal.
NFTs are all the craze. I'd love to be able to somehow zap a NFT of some sort across. We'll think about that for the future. Okay, we have a question from Mr. Harry Potter here. How significant are wrapped versions of Bitcoin? Surely the utility generates significant value. Another cracking question.
Well, we've been talking about this a lot internally, haven't we? And 160,000 BTC wrapped, is it?
I think we're about 180, so close to 1%. Yeah, I think close to
out of 18 million, not a lot, but it's growing. We were asking the question: has it caused network velocity to decline? Because obviously the coins that have been wrapped are active coins. They would have otherwise been, they're not. These are not the coins that are sitting half dead in cyberspace. These are coins that are some enthusiastic owner. And so yes, I suppose at the margin it would have damaged the velocity stat a little bit. But my view was always, if you're just picking up a coin going from the main chain to wrapped or to lightning or to wherever it goes, provided there's lots of activity going both ways in and out all the time, then the main chain stays somewhat active. And but if it just is sort of one way where you sort of plug it in and that's it, and then the activity is somewhere else and it never comes back, then I guess that we have to start to think more carefully about those. But what are we thinking about in terms of metrics is how to incorporate the sort of the wrapped and the lightning networks and so on back to main chain activity. How relevant is it, and so forth. There's some of it's completely irrelevant. So, for example, if you did build some kind of payment layer, then you don't want to start measuring the number of dollars going around the world, because you're just measuring global economics. So you wouldn't want to go that far, but you may want, there would be a competitor. So maybe another chain or another system is also trying to move the world economy. So you probably wouldn't want to totally ignore that. But you can see how it's complex, and we're just trying to understand whether the Bitcoin blockchain is busy and therefore valuable, or quiet and therefore not. That's the key question to all this.
Yes, absolutely. I would add to that it's significant as a sort of indicator to the industry, or from the industry perhaps, that there is a desire to have a fully crypto sort of store of value or reserve asset that can be used in a programmable way. And since Bitcoin has been slow to develop that same flexibility that the Ethereum network has, wrapped Bitcoin is basically providing that service. So you can take Bitcoin and its store of value properties, its reserve asset within the ecosystem. It remains decentralized and distributed across many different nodes, and it also can then be used within these contracts on Ethereum. So that means you can borrow against it, you can borrow it, and you can do multiple other things in the DeFi space. Okay, we've got another question come in. Charlie, I'll put this one to you. As the number of people using exchanges grows, the number of transactions within exchanges will also grow. This will mean less transactions will hit the Bitcoin network. Will this also hit velocity stats? That's a pretty interesting one. I don't necessarily agree with that statement. What do you think, Charlie?
I do agree with that statement because it's only we're only measuring settled traffic, which increasingly, particularly for institutional traffic, is only happening at the end of the day. So you could buy we could sit here buying and selling Bitcoin 100 times in a day with an institutional broker, and it wouldn't show up on the chain until we all sort of called it quits at the end. So yes, it is right. But do you need, if that's been true with IG index for years. So IG has had a lot of Bitcoin volume as one example of it, and that was never settled on the chain, and many of those Chinese exchanges which were also.
Everybody, welcome to day 2 of Diffusion Live. Really excited.
What's that? Okay. Yeah, so some of these sort of these spread bet type platforms have been very, very busy, and they don't show it. We're not trying to show trading volume here. Indeed, you can show trading volume from other means, and that's not the correlation that we're looking for. It's actually the economic activity over the chain, which is hard to define, and it's taken lots and lots of iterations to strip out certain types of traffic to get there. But we think we've got a reasonable handle on it, and there are competitors in the space that we respect have similar data to us, and the competitors in the space who we don't respect have very different data. So that gives us confidence that we're right.
Yes, I would very much agree with that. I think the reason I don't agree with the statement is that if there are more people using exchanges, yes, the number of transactions on exchange will grow, but that doesn't necessarily mean there'll be less exchanges on the Bitcoin network. So, I mean, a big part of understanding on-chain metrics is placing them, in a framework around the way that people actually use and interact with the network. So, like, I'll give you an example. If we're talking about retail traders who want to buy and sell Bitcoin, their typical flow would be to go onto an exchange. They would, connect their bank account. They would buy Bitcoin there on the exchange, and then they would want to transfer it into a custody solution. So they might trade more on the exchange while they're there, but they will still want to sort of take it offline and trade, and put it into custody. And that's then where we would pick it up on the chain. So, it's an interesting one because I think people can often get slightly confused because Bitcoin is this settlement network as well as an asset, can get confused between the idea that, buying and selling Bitcoin is not an on-chain thing versus, actually moving it, between wallets, which is an on-chain thing. So that's one side on the retail side. Now, where I think you are completely correct here, Paul, is if you look at the institutional side, as Charlie alluded to, where you might previously have had brokerages. So you have agency and principal brokerages. Well, an agency is essentially connecting one party with another party, and often going through, an intermediary. And there, each of those transactions will show up on chain. And if that flow is in deal flow, moves onto an advanced institutional ready trading platform that has a layer 2 settlement, then we wouldn't see those. So there are so many different scenarios that we need to think about and investigate. It comes down to then looking at whether transactions are being batched, the number of actual transactions as well as the value, the distribution of those transactions in terms of high value or low value. So we've got the quintiles. There's really a plethora of different data points that we need to look at in order to understand the data points that we're getting from the network. So I hope that helps. We've got another question here, so we will move on. At what percentage of an overall portfolio would you consider someone irresponsibly long Bitcoin? How much Bitcoin is too much Bitcoin in a portfolio, Charlie? I think that's the question.
Well, I know you're not supposed to say this, but I'm going to say it anyway. It's a big difference between if you bought Bitcoin 10 years ago, 5 years ago, 1 year ago, than if you're investing for the first time today. And there is a difference. And I know that people say theoretically there isn't. Because if you don't believe that, then every time something goes up, you take a profit, which is obviously not how you invest. You've got to let these things run, and you've got to have some sort of rebalancing program, which can be monthly or yearly, but some sort of discipline. And I think it's a really hard question to answer, because all the people who have done really well haven't ever worried about that. They've just, all their money's in Bitcoin, and idiots like me have diversified and haven't got nearly as much Bitcoin as they probably ought to, and so that's really the conundrum here. Are you basically prepared to take the risk? I would think that this epoch, I think it's hopeful to expect great things to happen above $60,000 this epoch. I think that you should be ready for 2024 when the next halving cycles come through. I think we're going to get these leaps, and I think we're going to get these disappointments. It's been remarkable how it hasn't disappointed yet. I mean, this has been the longest time we've ever seen Bitcoin, stay on some sort of premium measure for 3 months now. So that's great. Maybe something is changing, but 3 years is a long time before the next halving, and in 3 years something's bound to go wrong at some point, and there's going to be a dip. That's just my view. I don't know what it's going to be and when, but just intuitively, I take that view. And I think that it's hard to imagine that the price is going to run above $100,000. I know there are some models out there which think that's true, but these models aren't based on anything useful or tangible, and so they're not likely to they shouldn't really take up too much of your thought power. It depends whether if you agree with me there's be a buying opportunity in the next 3 years, then take some profits and be patient. Don't worry about it. That's my view.
That is fantastic. Let's try and boil that down into something, well, maybe this is unfair, so you can say.
So again, what's the maximum thing? Well, I think over a quarter of your portfolio is probably irresponsibly long.
A quarter, yeah, I think I'd agree with that.
Yeah.
Yeah, I mean, I think I saw Raoul Pal saying, I don't know if it was
50% or something, isn't he?
100%.
Yeah.
But it's easy to say in a bull market. Remember this.
That's fine. If you're in your 20s, then 100% fine. But just acknowledge just think about the scenario. So Bitcoin goes back to $1,000 for whatever reason, because the Fed bans it or something.
Yeah, it can happen.
Whatever reason, how pissed off would you be? What does that mean to you? Do you lose your house? Do you have kids? Are you about to retire? These common sense questions matter. If you're 20 something, it really doesn't matter.
As we start to tap on the doors of financial advice, I think we'll move on. We've got a few more questions have come in, so let's tackle those. Is there space for other digital asset sectors along Bitcoin in a portfolio? Great question. I mean, I think if I can take that one, Charlie, I think, absolutely. It's the first question when you're entering into this industry is, okay, how much of my portfolio do I want to put into this industry? And then the next one is, how do I want to distribute that within this industry? And when you look at some of the different sectors that are emerging and the type of activity that's going on them, it's quite sort of convincing that there are alternatives than just Bitcoin as an investment proposition. We've always come at this from an angle of utility, that the network is there to be used and is generating, has a fundamental value to people, and that's Charlie's view, that's my view, and Mark's view, and everyone at ByteTree. That's what we're interested in. And so as long as the platform is generating real value and has a utility, then it's very much worth considering as part of a portfolio. Okay, we've got another question here. As NFTs continue to demystify crypto to the masses, so true. I think it's been a real eye-opener. Do you see a future where a percentage of digital gold will be tokenized or wrapped? Charlie, what's your view on digital gold or gold on the blockchain?
Well, it's been done hundreds of times, hasn't it, or dozens of times, let's say. and the leaders in the space would be DGLD, which would be from CoinShares, and there would be Paxos Gold, PaxG, and there's another one which I can't remember. That's quite big. Tether Gold. Tether's got a gold, isn't it? And then there are lots and lots of little ones. And on my LinkedIn every day, someone says I'm launching a new gold token.
I'm pretty interested from someone. Sorry to cut you off. From someone who's not in the gold market, which is myself. I mean, how digital is gold? At the moment.
Well, it isn't. I mean, I think that there's been a criticism that gold hasn't sort of kept up on the tech side. I mean, I've got a friend, Jason Cousins, who set up Glint, and they've sort of digitized gold, so you can sort of email it to people and text it and vault it and spend it on a credit card and all that sort of stuff. So that's all good. And there are companies around like that. But I think that in the sort of bigger circles, the settlement layer and so on has been a bit slow to catch on to digital payment rails. And so tokenization could be the solution there. But there could also be some back-end solutions. I think that the big question really for me is this whole idea of Bitcoin the asset and Bitcoin the tech, and they do start to separate, don't they, at some point? And the value of a Bitcoin and the underlying usefulness of the network and what can be built on top of it. And so that's all very interesting. And so gold can certainly jump on board the Bitcoin payment rails. And people sort of make the argument that gold shouldn't, is expensive to leave the vault. We don't need to leave the vault. Just leave it where it is. Just move the title, just like an NFT. As you say.
Absolutely. And I think we're right in saying that Paxos, each Ethereum sort of gold Paxos token is allocated to a gold bar with a serial number.
Published on the site and all that. So I think Paxos have done a good job as far as I can see, and certainly seem to be the most credible of all the gold tokens. But of course, that wouldn't be investment advice because we're not giving investment advice.
Absolutely not. So if you have joined us and you're not part of our YouTube channel, please do hit that subscribe. If you have any questions following the YouTube, you can drop them in the comments section and we will do our best. No, we will answer them. That you have our word. You can get notified by hitting that bell. And last question here before we sign out. As a young investor, what's the best way to get involved with this in the space? There's a lot of margin trading at the moment. So my 2 Satoshis on that is be curious, be prepared to get burnt. So don't put too much money into any particular single coin or asset, but do play around with these different protocols. I mean, it's only through really having skin in the game that you can learn what works and what doesn't, and start to build out your own picture of what this industry can be and can become. Charlie, any sparring words for young investors?
Well, I used to say, go and buy 50 quid's worth of Bitcoin and put it into a wallet and send it to your mate, get your friend to do it and send it to each other. And, and then if you either think that's great and exciting and get interested, or you just, that'll be it. And if you've done that 5 years ago, by the way, your 50 quid would probably buy a decent jet ski. So, not that I want a jet ski, but you know what I mean? It was not a bad piece of advice. And so it's that sort of thing. Get involved, have a go, understand it, and I think that's the most powerful thing. Lots and lots of people have turned very small sums into very interesting sums just through knowledge and hard work, perseverance.
And are building some incredible new digital worlds and applications. We really are at the start of a very exciting future of digital economy. All right, guys, we're going to wrap it up there. Thanks for joining us. We'll be back next week, same time, same place. Have a good day.